Hello guys and welcome to another video. Before we get started with it, I want to say the next. I am not a financial planner nor a financial advisor. I am not FCA approved. I'm not approved by any institution that allows me to give financial nor investment advices. Nothing mentioned in this video should be considered investment advice or guidance. Everything shown, talked, and explained is for pure and only educational purposes. The risk is on your own hands. Enjoy. Hello everyone, good morning. Today is Thursday, July 22nd. I'm going to be talking about today's trades, today's results, and basically what happened through the day and things that I basically would like to talk, right? That I think deserve a little bit of attention. And yeah, let's just get right into it. We'll talk about a concept between a couple of commas. It's not commas, but you know what I mean, I think. Yeah, okay. So basically, something that I never said what I mean when I say cause, when I try to enter, let's say I say, okay, so we have a flip, right? So when I have a flip and then a break, then I'm going to enter the cause, or I'm going to place my entry on the cause to that break, right? In this case, as an example, we had a reaction that later causes a flip, and that reaction, that first reaction that we have, if we look to the left, we see that kind of did happen somewhere. Not saying it's a great area, right? But this area does look to come from mitigation, although it does fairly break that. Comes from mitigating that, and in the meantime took basically all of this liquidity and the liquidity that we have here, right? So it is somewhat of an area. So if I see a reaction there, I might take a risk entry. As an example, this morning I did see the trade and everything, but basically didn't like it enough to actually go for it. And as you can see, basically missed out on a pretty good trade that would have ended up in a take profit. But what I wanted to talk about is what do I mean when I say cause to flip in this case, right? When I say the cause to the flip, I mean literally that, right? The cause, what caused that flip or that break to happen, right? So basically I see it like this. Let's say we have, let me zoom out so it looks better. Let's say we have a move, something like this, right, and stuff like that. And we have something like that here. Let's say we want to take an opportunity or a trade on this move, right? Or we enter the market and this is what we have and we want to take a buy. The area where I would like to buy will be either this one or this one, right? As those are the order blocks, or what looks like order blocks, the most recent order blocks, right? So we have this break, and what I always, or not always, but most of the times try to get into is the cause to the break, the cause to the flip. So for me, the cause is what happened just before that break, right? So as an example, sometimes we have let's say we have this this structure, right? Let's say we have something like this, and let's do it like this, right? We have this flip. Sometimes I ask myself, what is the cause to this entry, to this flip? And if we check within this move, I don't have any kind of bullish candle in this case, right? I don't have a pause, I don't have a range, I don't have anything, right? Because as an example, here, well, even on this move, we actually have a pretty good example. Although the structure is broken by this, so yeah. Basically, as you can see, we have a lot of bearish candles, right? Actually, yeah, here. So we have this, right? This structure that is broken, and we don't have any bullish candles, which means that basically price just pushed lower without even stopping, right? We don't have a range. We don't have just at least one candle that, you know, just paused for a second to then continue to go lower. We have literally nothing, right? So as an example, if I had a break and then I had a if I had this flip, well, yeah, if we had a break, we will have another structure. Let's just say we have a zone here, right? And we wanted to take this trade with just a flip, okay? Having just this, we literally have no area to actually enter. And the only thing that I actually like is this small pause, which is literally just a small candle that doesn't move, doesn't do much, you know, just stays there for a sec and then causes the break, right? So this, if it was a better candle, I could consider that as the cause to this break, as it is just somewhat of a pause before that move, right? It's like, as I have said this before, somewhat of a way for price to actually breathe, take a deep breath before moving, before making its next move. And that's what I consider pauses or ranges, or, you know, just as an example, a swing high. Let's say we had something like this, and then we have that flip. This pause that price does before taking that making that flip that we have here, basically for me that is the cause to that flip, right? Because price basically took its time to basically, I don't know, grab liquidity or generate enough orders to basically just then generate this move to cause that flip, right? So for me, that's a cause, right? So here, right, when we have something like this, let's say we have an area here, I want to take a sell, and I have only the extreme. It can be good as it can be bad, because if we only have the extreme, it means that we only have one choice. So if we want to trade this, we will literally go for just that. So it's good in a way that, well, you don't have, let's say you had another area here. Now you have the risk of trying to take that, being stopped out, price reacts to the extreme and then continues to push lower, right? So the fact that we don't have any other choice but to go to the extreme can be good, but at the same time can be bad. Can be bad. Okay, so this can either be good or bad, as I said. And sometimes when I have such a clean push, what I expect for price to do is to just go above that high. It looks like a somewhat of a clean, or not clean, sorry, weak high. And other times what I expect price to do is do something like this and break that. Even though I'm trying to take a trade just with that flip, sometimes I expect price to just create another structure, right? And break that structure, and basically that will be my entry, right? Sometimes a market execution somewhere, depending on what price is doing, you know, but that's a little bit risky, as price could range here a little, say, okay, broke somewhat of a range there, so let's go for this, and price then just does that, you know, so it's a little bit risky. So for me, a cause to that flip is just that, okay? It's literally what happens before, what structure happens before a flip or a break, right? So here we have two choices, as I said, which is the extreme, which is the cause to this whole move, right? Or we have the cause to the actual break. Keep in mind that I only trade GU. The other day I got asked if my way of trading worked in every pair, and I kind of want to say yes, because I would think that Forex is literally just the same for every pair, as it is moved equally. Not equally, but similarly on every pair, right? But I can't really say for sure, as I don't really trade other pairs, right? I only trade UU, and for me that's more than enough. So basically, on my way of trading, I found out that the cause to the break or to the flip or to whatever I'm calling that a cause usually works better than the extreme, right? Sometimes you have a similar structure to this, but let's say you have actually equal lows, right? You have somewhat of liquidity or something like that on the cause to that break, and that's pretty bad in my opinion and experience, because, well, as we can consider this liquidity and go for the extreme, expecting price to basically take that liquidity, mitigate the extreme, and continue to go higher in this case, it can easily just react to that, because liquidity doesn't need to be taken right away, right? We have these equal lows, price could break the high, right? The cause is this thing, and price just comes back down, mitigates that, doesn't take the liquidity, and continues to go higher. And I have had situations where price just doesn't take the liquidity, mitigates an area that has liquidity that I didn't go for because it had liquidity, and basically ended up missing out on a trade, right? But even though that has happened for me, I continue to trade that way, because I know that when there's liquidity, there's a high probability that price is actually going to go and take it. Now, if we have just that zone, and let's say this extreme, I don't know, just, no, it wouldn't work with this example. But well, let's say yeah, like this. Okay, so let's do it like this. We have this equal lows, right? And price just goes higher, right? If I wanted to trade the cost to this break, we will say that this is a range, right? But that range still has liquidity lower. Now we could check that maybe here we have a small pause or something like that. That price could go and mitigate, because I've seen it working a couple of times. Such a small, sometimes it's just such a small thing that actually ends up working. And I don't know, just a thing like that could work out so amazingly in some cases. But yeah. So basically, when you have something like that, but let's say you have a clean price action here, so you actually don't have a pause or anything like that, well, price could easily just take that liquidity, react to nothing in here, or maybe something in lower time frames, even lower time frames that, well, we can't really see, and price then just continues to go higher, or price just pushes lower, and then just changes the trend, right? Or of course it reacts to this and continues to go higher, right? In this case, as an example, I wouldn't trade this. Maybe I would wait for price to show some strength and maybe do somewhat of a structure to try and take or something like that. But I don't know, it will depend a lot, because I don't like trading stuff that actually has liquidity on it, or not on it but against it, right? So basically for me, the cause, the area, or the structure that caused a break or a flip to happen works better than the extreme. Depends on the cases. Sometimes you will have a pretty good cause, but the extreme will end up working. Sometimes the cause will look very good, and the extreme will look very bad, and the extreme will end up working out, right? So of course we're in a. I'm used to saying we're in a game for some reason, but it's not a game, of course. But I do like calling it that. So we're in a game of probability. We are never going to be 100% right, right? So I mean, wouldn't be that fun if we were able to do that. I mean, I don't know, right? But I don't think so. But basically, yeah. Let's just continue with the important things here, right? The cause to the break or the flip. That's what I would usually go for, expecting price to just come back down and take that. Sometimes the cause will have liquidity, as I've said, and I still want to go for that cause even though it has liquidity. Then I try to enter on the 50% of the cause and the stop loss a little bit larger to cover those that liquidity. Or sometimes we have a better area that will take that liquidity, right? And basically try to go for that. But we do run the risk that basically price just mitigates this, doesn't take the liquidity, and then continues to go higher, right? So a cause to a break, a cause to a flip, is that the structure that happens before a flip or a break. Let's check here. We have a move down. As you can see, there's nothing to break inside of here, so this structure broke nothing. We have a push up and then a breakdown. This move that you have right here caused a flip. The beginning, or what caused this move that consequently caused the flip, basically started with this area, right? This turns into an order block when this is broken, right? When this, is broken, right? It could be considered a break, it could be considered a flip. I'm just saying, if we break structure, the extreme area that caused that last movement to break that last move, to break that low in this case, is the order block that basically caused it. In this case, I recognize it as somewhat of a range, as well, comes back up, or we could call it a pause, although it's a little bit larger. When I call it a pause, it's something like this as an example. That candle alone, or well, the candle that I showed as an example a few minutes ago, but yeah. Okay, so that for me is the cause. As an example, this flip is caused by this structure, right? This swing high. That, well, I recognize it as an order block. And as you can see, the price comes back up and takes that. What happens next? We have a break, a continuation, right? When we have that, as an example, here we have this area, which happened just before the break, right? Price comes back up, doesn't respect it at all, does start to fall a little bit, and then continues to go higher, right? Why did this not work out? So for me, I've seen trades like this. Let's say we have this flip, sorry, this break. We have this. The break or the move is as short as this one was, comes back, reacts to that, and falls. Right? I have had scenarios where that happened. But in my experience, it's more likely that when you have a pause such as close as this, it's more likely not to work than, well, for it to work, right? So you will have situations where price will react to that, and you'll have situations where the pause is very close to the break, which is not bad, but the move will go a little bit further, and then it might make a little bit more sense than this, right? This makes a little bit more sense than just this, right? That small movement doesn't make much sense for me than this whole thing, right? If this move, this break continued a little bit lower and then came back, that for me made a little bit more sense, and I might would have gone for that, right? But as that move basically didn't, as this pause basically moved this little, and price then came back right away and didn't continue to move, for me that was not a strong area or an area that I would actually go for, right? So I thought, well, this is basically literally the same thing. The only thing that is different is that we have 3 candles here and we have 2 here, right? 2 right there. That is the only difference, and this probably moved, let's say, 3 pips, and this moved 1.5 or something like that. It's just that's the only difference, right? So as you can see, we had the break. The cause, we could say it is this. It does respect it for a little bit, then continues to go higher. I see that it creates liquidity, so it's even more confluences towards this area. Price comes into this area, mitigates that, and falls. Now, I mark this as a continuation equal to break even or stop loss in this case, because I'm not going for the 50% of the trades. I'm usually going for 25 or just the open. If we would have gone for the 50% of this, I think we would have definitely ended up in a take profit. But basically, if we going for the 25 or the, well, actually, let me actually check something. I knew that it was 25, 125 will be target. Let me check, because 25, I think that at 4.2 or something like that, we might get out on a 1% profit, which is what I'm doing lately. But as you can see, it barely misses that, but still, it would have been definitely a break even if we would have been lucky, or a stop loss in the worst case scenario. So, yeah, okay. As you can see, what happens next? We have this break right here, right? So we had this break, price after breaking that comes back to the cost. Now we have this break, and what do you expect for price to come back to the cost again and then continue to push lower, right? Or that's the expectancy or the expected order flow for price to continue. The expected order flow is basically if price is creating higher highs and higher lows. When you are here, you expect price, when you're at a higher high, you expect price to do a higher low to then do a higher high, right? That is the expected order flow. And when you're doing lower lows and lower highs, you expect price here to create a lower low and then to create a lower high, right? So basically, if we're creating here lower lows, lower highs, lower lows, lower highs, lower lows, we expect not a lower high to then continue to go lower, right? So what do we have? What is the cause? As you can see, we have literally nothing within this move that caused this break, but we do have a small range of a couple of candles. As you can see, this is a pause, but then you have 2 candles that basically just don't move, so you have somewhat of a range between this range, right? So that's basically for me the cause. It's just move, range, you have a move, range, and then a push down, right? So for me, that's the cost. I drew it, and as you can see, it does come back to mitigate, and it causes a pretty fast reaction right away. I think it was just in 2 to 3 seconds that it took to just come back up, mitigate that, and fall as fast as it did. So yeah, for having such a small range, I definitely would have gone for the open, right? I just want to see what would have happened if we would have gone for this. saying we have 1.1 pips of stop loss, and target will be, well, 55 in this case. That's the take profit by going on the 50. Let's see, the 25 would have been right here. That's, well, 7 pips of take profit, and well, if we would have gone for the open, that definitely would have been a stop loss or break even, right? But again, it's just what works out, right? Okay, what happens next? We have a flip. What is the cost to that flip? Well, when I have such a strong move, I don't even look at price. I don't even like it, right? As you can see, the extreme area, the order block that basically caused this whole move, is what ends up working out. Price comes back and mitigates that. But I just don't like it. To be honest, I just didn't like it. Reason why I didn't even pay attention to price in this case. We didn't have a break, so we have our flip, we have our break, so at this point we could be trading. If we wanted to trade it as a continuation trade, we would have gone for the extreme of this whole push, right? Which is the cause to this break that we have here. And price, as you can see, does come back, mitigates the 50, and then continues to go higher, right? I say it's continuation because we have an order block here. That is the cause to this flip. Price then comes down, mitigates that order block, breaks up again. The cost to that to this break is this order block that comes from mitigating this other order block. So that's a continuation. We have first mitigation, and we expect now a second mitigation, which will be a continuation trade, right? So that's why I say it's somewhat of a continuation. I didn't entirely like this, which is one of the reasons why I actually didn't go for this. I identify this as a flip because this low, the low of this candle, basically is there. Then we break higher, breaking this high. So basically, this low is our new higher low. This is a little bit of an aggressive type of identifying lows and highs, right? But I wanted to do it this way in this case. Price pushes lower, comes back up, mitigates the cost to the flip, right? Which is the extreme because, well, there's literally nothing else to actually go for in this price action. Then goes higher, breaks. The cost to that we could consider this small candle that happens just before that break. But as you can see, again, small push, comes back, and doesn't work, just goes for the extreme. And basically came back all the way up to the extreme, which I didn't take. But when I saw this break right here, I went for this, which ended up being a stop loss. So you can see it did begin well, but then just continue to go into the direction that price wanted to go in this case, right? So yeah, so basically I see this break, I see the cost of the break, I go for that, and well, in this case it didn't work out. Now price even here does react again to the extreme, right? To the cost of this whole move, because as an example, if I wanted to trade this break, I might would have gone for this, but this pattern is this exact same pattern is actually the pattern that I showed this morning. Let me actually hide everything and show you. I installed this thing, which I loved using a few years back. Well, not a few years back, but a few months back, at the very least, which is Epic Pen. So let's look at it. Look at this way. Sorry. Okay, so we have this area to break, right? We have that to be broken. Price is basically pushing higher. I would say the flip, we flipped here, we broke here, so actually this is our flip, right? So this is our flip, this is our break. What price does is this. Have a pause just before that flip, and then we even have a break. Price comes back to that, fails to respect that area, and then continues to go lower, and basically mitigates somewhat of a lower range that ends up working out better, right? That exact same pattern that I'm showing right there is exactly the same thing that happened here. So here we have that this high took this low that we have back here, right? I don't know why it went thicker. So this is our confirmed high. So when we break that, that's our flip, right? So this movement takes our flip. Now we have a move down. So we're expecting this break to happen for us to then take the buy, right? The break happens, and the cause is this, right? This whole area. And again, literally the same thing happens. Price does not respect that area, didn't respect the extreme in this case either, went lower, then went higher, then continued to push lower, right? But this exact same pattern here, this one, is the exact same thing that basically happened on, the price action that I showed here, right? I don't know. No, I didn't actually trade that, but yeah. Okay, so let's continue. So that exact same pattern is something that I do want to consider because I've traded it a couple of times and I've seen it so many times. Then I've come to realize that it just doesn't work. It just doesn't work. You know, I've seen it, I've traded it, and I don't recall seeing it work. So it's just a pattern that when I see it, I will just not trade, you know. So what do we have later? We have 1 flip, 2 flips, 3 flips, 4 flips. Okay, so a lot of flips, right? We finally kind of flip again below when we have this move, kind of respecting the high, taking all of this liquidity. So I decided to go for that. Also, this area, if I remember correctly, was reacting to something on the left. So I decided to go for this, and as you can see, I ended up in a stop loss. A little bit of a fear of missing out this trade, not gonna lie. Yeah, to be honest, I wanted to trade. Lately, I've been very scared to trade, and I've come to realize that when I am not actually taking trades, when I'm missing out of trades, I'm analyzing, I'm saying, okay, so this is a good trade, and I just don't take it. I say, okay, so actually this trade would have worked out great, right? And when I come to the next one to take the other trade, I end up in a stop loss. And because I didn't take the first trade that I should have taken, I end up in a loss, and not having to take profit, which would have basically covered for that loss and probably even 3 more, right? Based on the fact that we basically have a 1:5, 1:4, basically our ratio, right? So when we lose one, when we win one, we can basically cover 4 to 5 losses depending on how much we actually took, right? So, yeah, okay. What happens later? We have this structure. I check what happened here, and we do have a better area. Let me actually show you. We had a better area than what we had before, in this case, because it came from mitigation and a lot of stuff. And it's this. Okay, so this is the line where price reacted. If we do this, price basically reacted to somewhat of a 25 or 50% of this range. If we analyze what did this range do, and we could say that it basically at some point broke this whole movement, right? This pretty strong low. If we look at where this extreme area or range comes from, we see that it came from this, and that caused another major break right here below. That basically, so this is somewhat of a continuation, right? So we have the cause of this break, the extreme pushes lower, and basically took, we're 16 July, 6 days to come back here, reacted, and we have somewhat of a DCE or something like that now in the present. This depends, of course. Right, so all of that, I didn't actually analyze all of that just in the moment, as it didn't make much sense for me to do so. But what I basically saw is price reacting to this range that came from a mitigation. I realized that there was a low here that was very important. As you can see, price took a lot of time to actually break through that, and this range was the cause to that break, right? And so this is an important area, and that important area basically was respected by later by this range, which is where prices currently react, right? That's what I saw. I didn't need to draw all of that. I was trying to explain it a little bit further, and yeah, basically that. So as you can see, I missed out on the first trade. And why is that? Because we actually don't flip. We don't have a flip unless we consider this a flip, but that's a little bit crazy. So I didn't go for this sell, which, as you can see, worked out amazingly, right? Take profit in just a few seconds, just a few minutes, sorry. So I said the flip, right? We don't have a break. We do break this structure, but when I say that I want a flip and a break, I want this. This is our flip, this is our break, right? I want new structure, not for price to break old structure, because otherwise this is our flip, this is our break, I'm going for this. In this case, it worked out amazingly, but in other cases, as you can see, here we have a flip, and price actually, well, no, that's not a good example. Yeah, I'm not going to find an example right away. I don't want to lose that much time either. Okay, well, here. This is a flip, right? And this is a break. Right here in this same movement. Oh, but this one worked out again. Oh, fuck. Well, okay. Let's just continue to see the other trades. So basically, what I want is a flip and a break of new structure, not of old structure, right? I don't know if it works the same, because maybe it does, and I'm just wasting time waiting for new structure to be created. But when I see just this, even though it has created structure, this is just a flip for me, right? It doesn't cause a new break. So for me, that's the way that I identify it and how I trade. Okay, so at this point, I decided to trade this, which worked out amazingly. I got out on a take profit here. As you can see, it's 3.91 R, not 5 R as it should be. And that's because at this point, with 4.5 pips of stop loss, I'm actually at a 1% target. If I will leave the 5R, this is somewhere around 300. No, sorry, actually more than that. 330 something, which is somewhere around at 1.25, 1.30 or something like that. Which is a little bit more than 1%, which would actually be better. So actually go for that instead of just the 1%, of course, because we actually end up getting an extra R basically. But honestly, I just feel good going for that 1%, just like that, to be honest, with just one trade. So yeah. So I get on a take profit. At this point, I went downstairs, started to make myself a little bit of coffee, just spend a little bit of time with family, and basically missed out on the fact that we basically had this pause. To be honest, when we have just a take profit, I don't usually would just take a trade that happened literally, because we get our own take profit here, and literally 1 minute later we are already triggered on the next trade. So for me, it would have been definitely a missed trade, unless I was actually saying from the beginning when this break is happened, okay, so this is the pause I'm placing the trade, right? But that will be trading while I already have an entry, and that's not something that I quite do. I don't do scalings or anything like that, so I'm pretty sure that I would have missed out on this on every occasion. Now this comes in play again when we have a pause just before the break, right? As you can see, it wasn't a very prolonged move, right? Price just came right away and broke down. As an example, in this case, it did work. Now, what's the difference between this one and this pause? For me, we have somewhat more of a range, which you could say the wicks are up here, right? Let me actually just hide everything and draw again with this candle, with this things, alright? So you could say the wicks are up here, right? So if you're saying you got a range, then that range is this whole thing, right? From this wick to this wick, which can be thought of so, right? But for me, I saw that we had a lot of resistance there and a lot of support there, or we could call it there, right? So for me, that's what my range in this case was, right? So for me, that's what I consider this range before a break, right? I don't entirely love it, but as an example, if we go higher to see what we have up here, we don't really have that much. We could say that this is the extreme or the block, which it is. We could say that it has liquidity, which it does, because we have a couple of pretty consecutive basically highs. That is, all of that is just liquidity standing there for price to basically come up and take. But at the same time, I don't know, I just don't entirely like that extreme. It's like, I don't know if I can find somewhat of an example. Oh, with the wheel of the mouse I can change the size. Okay, so let me see if I can find something within this price action that we have here. But yeah, I don't know. I just don't entirely like this. So we're talking about the difference between this range slash pause and the other pause is this is more likely a range than just a pause, right? So for me, that's why I might would have identified it. Keep in mind that I didn't identify this before it happened. I came back and realized we had a range. Price had basically wicked within that range, and then realized that it caused a break and everything. So I saw this after it happened. But well, I think it's a little bit easier to identify this as a pretty good range or a better range compared to the other pause. Yeah, I don't know. Maybe it comes more from the eye than the technicals. Okay, so basically missed out on that. How much do we have? Okay. Okay, so what do we have next? What I identify next is this. I have here, have a flip. We have a break, the structure, the pattern that we were talking about earlier, where we have flip, the break, and this area never works. I mean, at least for what I've seen, it has never worked. So I'm probably going to stop trading this or basically identify them and analyze them as they go on to try and say, okay, so this continues to not work or now it's working, right? Just to basically realize that, not realize, but just continue to see if the pattern is actually not working or if it's just a few cases and those few cases are the only ones that I've actually identified, right? That's what actually goes through my mind when I'm looking at a new pattern, right? When I start to identify a new pattern, I gotta make sure that I'm not about to start using a new pattern that has worked maybe 2 times in the past, I don't know, 10 weeks, and we're talking about 2 between maybe 20 times the pattern appeared, and basically we have a 1% ratio, 10% ratio, which is not that good. So yeah, that's what should go through your mind when you're trying to introduce a somewhat of a new pattern within your trading, right? You have to check out that it continues to work and it's not just a couple of times that it worked and you were lucky to see it when it worked and not when it didn't work, right? So got stopped out there. Then we have a flip. We have another flip here. I do see that it maybe took all of this liquidity and then fell, right? That's why I took this trade. Now, I didn't take this as a market execution. As my stop loss, I want to place my entry here, and my stop loss up here was going to be higher than 45. Should have gone for 50. And basically, when price started to reject, I said, okay, you know what, fuck it. I went for 1.5 lot size, which is 4 pips of stop loss, and well, had to place a stop loss on the 4 pips of stop loss. Otherwise, I would have lost more than the 1%, sorry, more than the 0.25 that I risk, and that's not quite something that I want to do. So, price started to move very weakly. Didn't not weekly, but in a weak way, right? So I didn't entirely like it. So I ended up moving my stop loss first here, and then when we broke this, moved my stop loss here, which is when then price takes me out. Sorry. When we had these equal highs, I said so this area, which is a pause before all of this move, basically does look good, right? And I just decided to place a trade here. 3 bits of stop loss on the open, as the liquidity was pretty close to that, and the stop loss just above. As you can see, I was almost tagged out, and well, the price ended up working out amazingly, tag me out and take profit. I actually closed this manually because I got my alerts on my phone, and I said, okay, so let's check TradingView to be not TradingView, sorry, MetaTrader to see how we ended up on the day. And I realized that the trade hadn't closed. So I wasn't sure if my take profit wasn't triggered. Maybe my alert was triggered on this small wick and then pushed higher, right? And basically ended up closing at 225, which is basically maybe 0.95% or something like that. And that was basically before I thought maybe I moved my take profit here on TradingView, but not on my MetaTrader, right? So from that point, even though it was just small thing, it could continue to push higher, as we can be a little bit unlucky on that way. So basically, okay, so let's just close it here. It was a take profit, good analysis, still getting out of profits, so that's pretty good. Basically, close the trade maybe, I don't know, here. I can't really say for sure. I didn't actually check. So yeah, after that, I just, of course, stopped trading, and as you can see, not much actually happened. Yeah, not really much. And yeah, that's pretty much it. To be honest, I talked a little bit about causes, talked about the trades, patterns. I think it was a pretty good talk. I want to do the markups. To be honest, I finished the videos. I finished recording the video. Really exhausted, but I will do the markups as I do like sending the screenshots and everything. But yeah, that's pretty much all that I really wanted to talk about. I'll be coming back tomorrow with better results. And tomorrow I might do something like I did yesterday, which is me talking live and saying or mentioning or even showing what I think of the market. You probably remember how I did yesterday. I didn't do that today because I did want it to be a little bit more focused on price and everything. And yeah, pretty much that's it. I'll see you soon, guys.